Good morning, everybody. This is Adya Mishra from B.Ed second semester, and the topic for presentation is Principles of Double Entry System. Now, I'm starting straight with the generally accepted accounting principles, assuming that the fundamentals are clear to you. So, in order to bring uniformity and consistency in accounting records, GAAP was introduced. Now, GAAP refers to the rules, and these rules are known by different names such as principles, concepts, conventions, postulates, and assumptions. So, GAAP refers to the rules or guidelines that are adopted for recording and reporting business transactions in order to bring uniformity and consistency in the preparation and presentation of financial statements. Now, looking at the diagram, the conventions will be more clear to you. Now, here in the diagram, there are around 13 to 14 principles or conventions given to you that are business entity, money measurement, going concern, accounting period, cost, dual aspect, conservatism, full disclosure, consistency, matching, historical record, objective evidence. Now, I'll be discussing each of these principles briefly. Let us start with the business entity concept. Now, in accounting, in law, the business and owner are treated as two different persons. Business has a distinct and separate identity from the owner. Second is money measurement concept. Now, this concept means that only those transactions, only those accounting transactions or happenings or event taking place in an organization are recorded which are expressed in terms of money. Going concern concept means that it works on the assumptions. It assumes that the business firm would continue to carry out its operations indefinitely. Accounting period means that all business transactions they takes place within a span of time. Now, span could be monthly, quarterly, or yearly. Cost concept means that assets are recorded at the cost of acquisition. That is the cost at which they are acquired and not at their market value. And assets, when I'm talking about assets, it should be only fixed assets. Dual aspect concept, it means that every business transaction, every accounting transactions has a dual or twofold effect, and therefore it should be recorded at two places. It means that for every debit there is equal and opposite credit. Consistency concept means that following the same accounting principles or methods for different financial years, for different periods, and this consistency concept is very useful in comparing the financial statements of 2 years. Of 2 financial years. Full disclosure concept means that all material information should be disclosed. It means that all those information that could affect the decision making of our stakeholders should be properly and fully disclosed. Now, when I'm talking about stakeholders, so it means that all those persons who are interested in the business. It includes investors, creditors, debtors, etc., suppliers, etc. Materiality concept is similar to full disclosure concept. It means that only the material information that is relevant and reliable should be recorded. Non-material information should not be disclosed. Non-material information could be that you bought the stationery items such as staplers, erasers, pencils for the business work. So such transactions are considered non-material and that should not be disclosed. The information related to those transactions should not be disclosed. Now, then we have matching concept. It means that expenses are matched with the revenue of the same period. Historical record concept. It means that only those transactions which have actually taken place in the business during a particular period of time should be recorded, and not those transactions which may take place in future. Then objective evidence concept means all accounting transactions should be evidenced and supported by the documents such as invoices, receipts, cash memos, etc. And these documents, they act as the basis for making entries, and also they are very beneficial for verifying the transactions by auditor. Then we have conservatism concept. It means that anticipate no profit but provide for all possible losses. It means that profits are taken into account only when they are actually realized. It should be taken into account only when they have actually been realized, while the loss